Over the weekend, one headline changed everything for the stock market. President Trump announced a peace deal with Iran. The Strait of Hormuz is finally set to reopen, relieving pressure on this vital supply of oil. And by midday Monday, it was already shaping up to be one of the biggest single-day rallies we've seen in months, all from one banner headline. But here's what I really want you to understand. The easy money from the immediate reaction is over. This was long anticipated, and the exclamation mark has now been added. But it tells us nothing about what comes next, and that's exactly where I'm going to show you today. In this video, I'm going to cover three things. First, exactly what happened, why it matters more than people realize. Second, which sectors and stocks are set to win the most from the shift. And third, the part you really don't want to miss, two specific stocks I believe are poised to greatly benefit from this move. I personally hold both of these stocks in my Zen Investor newsletter portfolio and believe they have serious upside potential as the peace deal holds. So stay with me all the way to the end to get those two prime stocks. By the way, I'm Steve Reitmeister, but all my friends call me Righty. I've been investing for over 40 years. Much of that time as editor-in-chief of Zacks.com, and now I'm a partner at WallStreetZen.com, where I help create a quant rating system to simplify the research process for stocks, which gives investors greater peace of mind. And if you like news breakdowns like this one, then please hit that like button. That's my signal to record more videos like this in the future. Okay, let's get to that story. Late Sunday night, the deal was announced. Trump confirmed it minutes later on Truth Social. The post was pure Trump. Ships of the world, start your engines. Let the oil flow. The official signing ceremony is scheduled for Friday, June 19th in Switzerland. So is this completely locked in? Well, unfortunately not. This deal, as it currently stands, is a framework agreement, not a full permanent treaty. Further technical negotiations still lie ahead, and we have all seen how wishy-washy things have been to date. Iran's foreign minister has already signaled that Iran considers the Strait of Hormuz firmly under its control going forward. And over the weekend, there was a fresh exchange of fire between Israel and Iran-backed Hezbollah in Lebanon that reminded everyone how fragile this region can be. Trump himself warned folks about not blowing this deal, right? So headline risk is real between now and the signing. And if you see any negative news this week, then you can expect some volatility. All right, here's the key. Both sides want a deal. So any detours or delays are just negotiating tactics en route to a final deal. So don't take the bait and sell stocks if the deal is not finalized on time this week. Now let's focus on the initial market reaction as it holds some clues about what comes next. The NASDAQ 100, loaded with the biggest tech stocks, was the clear winner, as you can see by these top 10 big gainers in the session. We're talking about Western Digital up 15%, Strategic Incorporated up 10%, Seagate up 10%, Micron 7%, AMD 7%, DoorDash 5%, Booking Holdings 5%, Qualcomm 5%, Microchip Technologies up about 5%, and Lam Research in that same 5% category. All right, what's the common thread? Well, memory, storage, semiconductors, AI stocks. One of the very interesting ones with a travel name hiding in there. I'm talking about Booking Holdings. Western Digital and Seagate are storage companies that got hit hard during the conflict given supply chain fears. Both bounced back sharply on this news. Now, Micron, AMD, Qualcomm, Lam Research, that's the AI chip supply chain moving together because lower oil means lower inflation. Lower inflation means the Fed has more room to cut rates, and rate cuts are like rocket fuel for growth stocks. And then there's Booking Holdings with the symbol of BKNG. That's a travel stock, and that's a very important signal that I'll dig into more in a few minutes. Meanwhile, over in the bond market, the 10-year Treasury yield dropped to around 4.43, its lowest level in over a month. The bond market was sending a clear message. The inflation scare is now fading away. That's a green light for equities, and with the Fed meeting this Wednesday, that message is about to get even more important. And crude oil told the biggest story of all by dropping to around $80 a barrel on Monday. Not long ago, oil peaked at over 110. So this is a massive swing for the better. It's truly a massive tailwind for the consumer and for corporate margins and for inflation. And just about it's good for everything except for oil stocks. And it sets up opportunities I'm going to walk you through. By the way, if you like this kind of commentary, then you should know that these are the types of insights I share in my live weekly training sessions. They are totally free and include some of my top stock recommendations. Please join me on the next one this coming Monday at 7 p.m. Eastern. Just visit wallstreetzen.com/live to sign up for free. All right, now look, I know some of you might be skeptical. The Middle East has a long history of deals that seem to fall apart. And I get that, but here's why I think this one is different. It comes down to a simple political math. Republicans face midterm elections, and high prices at the pump are not a winning platform. The longer this conflict drags on, the higher energy prices stay, and the more disgruntled the voting public gets. This is a very real political incentive to wrap things up as soon as possible. A peace deal fixes this energy problem, gives Trump a foreign policy win, and helps the party going into November elections. The incentives are all pointing in the same direction. Now, that doesn't mean there won't be some bumps between now and signing, but does it indicate a clear forward direction? And smart investors are already positioning for that eventuality. That said, here are 3 things to watch this week. First, the signing of June 19th. That's the single biggest binary event. If it gets signed, then expect another leg higher in travel, consumer discretionary, and growth stocks. If it falls apart, then brace for a reversal of all those trends. Second, the Fed meeting on Wednesday. New Fed Chair Kevin Warsh holds his first press conference as chair, and people will be watching very closely. Traders are not expecting a big move, but with oil falling hard and the inflation narrative shifting fast, this could be the meeting where the tone changes. A less hawkish Warsh is another tailwind for growth stocks, and after Monday's rally, the market is clearly already pricing that in. Third, let's keep an eye on oil. We're already sitting at around $80 a barrel and maybe still falling. If it breaks below 78 and holds there, then this is a sign the market believes this deal is real and lasting. Now, if it starts climbing back above 85 or higher, then that's a warning sign that something has gone wrong. Oil is like a real-time peace deal indicator and likely more reliable than anything you'll read on Twitter. I'll be following this story, and we'll cover it further in future videos. So if you want to ensure that you see my next videos, then the best thing you can do for yourself is subscribe and hit that notification bell. Now, let's get back to some actionable takes on the stocks I'm watching now in this current environment. I'm going to walk you through 2 stocks the Zen Ratings quant model is flagging right now as exceptional opportunities. Each one tells a different part of the investment story. Remember, the Zen Ratings provides a 115-factor fundamental review that leads to an intuitive letter grade of A to F. This overall rating is built on 7 component grades that let you see a stock's specific areas of strength and weakness. Now, I'm just going to give you a quick overview on each of these stocks. However, if you want to research them in greater detail, then visit the quote pages on WallStreetZen.com for the latest data and insights. Okay, I know you already know this, but while I'm sharing real stocks and data, this is not personalized investment advice. Always do your own due diligence before buying or selling any security. Okay, let's get going with stock number 1 in Micron Technology, the symbol of MU, right? You already know Micron. It's a top semiconductor play in this rally. That's largely because it is a meteoric growth stock, benefiting from the AI revolution, leading to truly off-the-chart memory chip demand. So with the deal announced, it was like lighting a rocket under the growth stocks like Micron, which was already up about 7% by midday on Monday. Wall Street is firmly on board this stock. The majority of analysts tracked on WallStreetZen.com recommend MU as a buy or strong buy. And for as much as shares have rallied in the past year, the fair value price targets point to even more good times ahead. Some of the most recent targets point to over 60% more upside in the coming year. On top of that, it is also part of my Zen Investor newsletter portfolio, where I handpick the top 20 stocks for the long haul. And yes, Micron is one of them. The Zen Ratings smiles upon the stock as well and earns an overall A rating, which amounts to a strong buy recommendation. According to the most recent data, it actually ranks in the top 1% of the 4,600 plus stocks in the database. Plus, it's the number 1 ranked stock in the entire semiconductor industry, which is loaded with a lot of great stocks. The component grades also tells a compelling story that starts with the A rating for growth that is in the top 2% of all stocks in this vital category that generally points to more growth ahead. Even better is the top 1% showing for financial strength. This is not a hype story. It is a company with real earnings power. Now, it's true, Micron does have a D for safety. This is a reminder that Micron operates in one of the most volatile industries in the market, and that is what leads to that lower safety score. But when you put it all together, it is easy to appreciate the future upside potential for Micron. You have an incredible growth story thanks to the AI revolution, strong Wall Street support, and elite Zen Ratings fundamental profile that often points to future outperformers. And by the way, both Micron and the next stock I'll mention have both been discussed in my recent live training sessions. These weekly sessions cover the gamut from my market outlook to a trading plan to outperform to my top stock recommendations. I don't just talk about what I'm buying, but how I'm finding them so you can do the same in the days ahead. I also unveil my trade of the week, combining the best of the Zen Ratings with my greater than 40 years of investing experience. If that sounds good to you, then join me this coming Monday at 7 p.m. Eastern Time. Just pause the video for a moment and register for free at wallstreetzen.com/live. You'll also find a link in the description or scan the QR code in the screen. I look forward to seeing you on Monday. Now back to the stock's best position to benefit from the peace deal with Iran, and that brings us to the second stock in Expedia Group with the symbol of EXPE. This stock is also one of the most recent additions to the Zen Investor Newsletter portfolio. The timing on the pick could not have been better. Let me explain why I believe this is such a compelling opportunity right now. Note, the travel stocks got kneed in the nether regions at the onset of the Iran conflict because higher fuel costs lower demand. This spells opportunities for investors as this negative trend is quickly unwound. Most people don't realize how dominant Expedia is as a business. They own, Expedia, Hotels.com, VRBO, Trivago, Orbis, Travelocity, Hotwire, the list goes on. This is the single most comprehensive portfolio of travel brands under one roof, powered by leading-edge technology that gives them a structural competitive advantage. Wall Street analysts are certainly taking notice. For instance, Navid Khan of B. Riley, who is in the top 13% of all analysts based on his stock picking track record, he has the street high price target on Expedia. And as of recording, that fair value target represents nearly 50% more upside potential from current levels. That's not a wild guess. That's a well-respected analyst looking at the fundamentals and saying, hey, this company is worth a heck of a lot more than the market is currently pricing in. And yes, the Zen Ratings agrees. Expedia's Zen Rating is an A, equal to a strong buy recommendation. It currently ranks in the top 3% of all stocks tracked. Plus, it's the number one ranked stock in the entire travel industry. Now, let's compare that to Booking Holdings that we talked about earlier. That is only ranked number 7 in the industry. So this is a difference worth noting getting into Expedia. Now, Expedia's fundamentals reflect that dominance as we turn our attention to the component grades. Now, growth ranks in the top 15% of all stocks tracked, and even better, value comes in the top 1%. Often growth and value are diametrically opposed. Thus, it's uniquely attractive to get a stock that scores so highly for both of these vital categories. On top of that, financial strength is in the top 1% as well. These are not borderline numbers. This is a high-quality business trading at a discount because of the geopolitical overhang that is now evaporating. Now, full transparency. If this peace deal hits a snag between now and signing, then Expedia and other travel stocks will likely pull back. That's the nature of a macro-driven recovery play. But once the deal is signed and the Strait of Hormuz is formally open for business, then travel stocks are going to soar, and Expedia stands to benefit more than almost anyone else. This is the kind of setup where the risk-reward is firmly in your favor if you have even a modest level of confidence the peace deal holds. Okay. There you have it. My take on the peace deal and what it means for investors. Now, what do you think of my outlook? And especially my 2 stocks to buy now? Share your thoughts in the comment section below. And if you like this take, then be sure to check out my video on the latest news for semiconductor stocks. It's still quite relevant and connected to the peace deal, and it's on your screen now.